Divergence is a well-known trading tool. It's used generally on a MACD, an RSI, CCI even, something like this. But did you know that you can trade Bollinger Bands with Divergence as well? My name is Russ Horn, and I am going to show you how to trade Divergence using the Bollinger Bands. First of all, I'm going to add a Bollinger Band, and it's just going to be the basic Bollinger Band to my chart. So indicators, trend, and Bollinger Bands. Now, I'm going to use the 20 period and the 2 deviation applied to the close, but I'm going to change the color a little bit. Let's go with something that's a little bit different than the candle colors. So let's go maroon, and I want to thicken it up so you can see it on the video. And okay, so now we've got Bollinger Bands on our chart. So from here, let's take a look and see if we can spot some Bollinger Band divergence. First thing we're going to notice with the Bollinger Bands is, I'm going to zoom out a bit so we can see this a little better. There are bulges and waistlines, tighter areas and wider areas on the Bollinger Bands. We've got these kind of bulbous ball type circular areas, and we've got these little narrow waistband type areas. What we're looking for are these bigger, wider sections of the market that the Bollinger Band has expanded to form kind of a bigger area. So what we're looking for is a market move, which is going to generally happen outside of the band, and then a pullback into the band, and then a second market move that is higher than the first market move, but maintains itself inside the same bulgy area of the Bollinger Band. We don't want this formation to occur between a waistline. We want this to happen within one section of the Bollinger Band. And what we get here is a really nice example of this. Price moves up, clears the bands to the outside, and we get this nice swing high. Price pulls back and then makes another swing high that's a little bit higher than that previous swing high. But this second swing high is maintained inside of this outer Bollinger Band. If I draw a line to connect the swing highs, we can very clearly see that we are making higher highs. But what happens as a result is a divergent short. This shows us that the market really is losing steam, that it doesn't have that momentum to keep moving forward anymore. It is getting very tired, and as a result, the market is either going to move sideways or reverse. And a lot of the times, it reverses. And what we get here is a very clear indication of how that worked. We had the market move up outside the bands, made a new high, which was inside the bands, and from there, the price dropped down. Now, there's several different ways to trade this. You may have an entry that you like, moving average crossovers, the close of a price past a moving average. You might have, whatever the case is, I like to use my trend lines. So if I draw a trend line like this underneath the price, connect this low to this low, when I get a close below the trend line, I could target either this middle 20 simple moving average of the Bollinger Band or the lower band itself. So when you have good divergence, a lot of the times you are going to see that the price gets to that lower Bollinger Band. So let's take a look at this for a long trade. We don't really have to look too far. We see one right here. There's a nice bulge in the band, and price comes down, makes a swing low, and it is considerably outside of the bands, comes back inside the band, and then closes just at the band level. So we are very clearly not getting beyond the band as far as this first low did. So if I connect these, we can clearly see that we do have a lower low being formed, but the movement outside the bands is less and less. This second movement can indeed get outside of the bands, provided it is just not as far as the first movement outside of the bands. So we've got this market movement making a low and then a lower low, but at the same time, it is not getting outside the bands the same way. If I take my trend line tool, I could take a long trade when we get a close above the trend line to either target the 20 SMA or the upper Bollinger Band. So this is Bollinger Band divergence. And then previous to this, we have another example of bearish divergence. Swing high, followed by a second swing high that is inside the band. First one is out. And then we have one that is inside, and the move down gets to the lower Bollinger Band. You don't have to look too far to find these. They are going to be fairly relevant. We're going to see them more and more. And the more you understand how it works or what it is you're looking for, the more they're going to pop up. So if you're using Bollinger Bands in your day-to-day trading, this is going to be an extra tool that you can use to really take a few extra dollars from the market. Try it out on a demo account, see what you think. You may not want to use the trend lines as your entry criteria. This is one that I really do like. You may have an entry criteria that is unique to yourself. So give it a go. See what happens. Find some Bollinger Band divergence, look for your entries, and see how often we get a market move to the opposite side to reach the Bollinger Band.